Fixed returns, monthly income, real security sounds compelling, but what makes it all possible? Naturally, this raises a few important questions. How are the returns generated? What exactly secures your investment? Who protects investor interests? And can you exit before maturity? To answer these questions, we're going to take an intermediate level look at GHL India Asset Investment Structure and the key components that support it. In this video, we'll answer some of the most common investor questions and show you how GHL India's secured NCD structure is designed to combine fixed income with asset-backed security. With that, let's get started. 1. Are returns fixed or dependent on project performance? The returns offered under GHL India's secured NCD structure are predefined and contractually agreed rather than being structured as a profit-sharing arrangement. As an investor in a secured NCD, you are investing as a debenture holder. You are not participating as an equity partner. Your return is determined by the terms of the NCD issue. This means the investment is designed to provide fixed monthly interest payouts with principal redemption at maturity, subject to the terms of the debenture. How is this different from equity investing? Equity investment returns depend on profits. Investors share upside and downside. No predefined income secured. NCD investment return rate is agreed upfront. Monthly interest payouts are scheduled. Capital is redeemed at maturity. Investors do not participate in project profits beyond the agreed return. Then, why does project performance matter? This is where many investors get confused. Although returns are contractually defined, the SPV's ability to meet its obligations ultimately depends on successful project execution, asset monetization, cash flow generation, effective risk management. This is why GHL places significant emphasis on acquiring below market value, asset-backed security, trustee oversight, exit planning, SPV structuring. These mechanisms are intended to strengthen investor protection and improve repayment confidence. Important clarification. Investors receive a pre-agreed fixed return structure, while GHL manages the underlying execution and project risks. Our investors are debenture holders, not equity partners. Returns are predefined and paid monthly as per the NCD terms rather than being linked to profit sharing. You earn contractual fixed income while we focus on executing the real estate opportunity. 2. What assets secure the investment? At GHL India Asset, investor capital is secured by tangible real estate assets acquired by the SPV rather than being backed solely by the company's balance sheet or future business projections. As part of the investment structure, the identified property is acquired in the name of the SPV. A mortgage/charge is created over the property. The security is held by the debenture trustee on behalf of investors. The charge is registered with the Ministry of Corporate Affairs. What exactly secures the investment? The primary security is the underlying real estate asset. The property acquired for the project serves as the security backing the secured NCDs. This means investors are not relying solely on company promises. The investment is linked to a tangible asset. The trustee holds enforceable security rights over that asset. What role does the trustee play? The debenture trustee holds the security on behalf of investors, monitors compliance, acts in the interests of debenture holders in the event of a default. The trustee is appointed specifically to safeguard investor interests. What is security cover? GHL generally maintains a security cover ranging from approximately 1.1 times to 1.5 times of the invested capital. This means the value of the secured asset is intended to exceed the amount raised from investors. Why is asset-backed security important? Asset-backed security provides additional investor protection, tangible collateral support, trustee enforcement rights, stronger downside protection compared to unsecured borrowing. Important clarification. Our investors are secured against real assets, not just future business expectations. Every secured NCD is backed by a real estate asset owned by the SPV, with security held by an independent debenture trustee. The investment is secured by property, monitored by a trustee, and supported through a registered security structure. Security reduces risk, but like any investment, it does not eliminate risk entirely. That's why asset selection and due diligence remain critical. 3. How is charge created on the underlying property? At GHL India Asset, investor security is strengthened by creating a legal charge over the underlying property in favor of the debenture trustee, who holds the security on behalf of all debenture holders. Once investor funds are mobilized and the property is acquired by the SPV, the security creation process is completed through legally enforceable documentation and regulatory filings. It means the property is mortgaged in favor of the trustee and the charge is registered with the MCA. What is a charge? A charge is a legal right created over an asset to secure the repayment obligations of the issuer. In simple terms, if the SPV fails to meet its obligations, the secured asset can be enforced through the trustee for the benefit of investors. How the process works? Step 1. SPV formation. A special purpose vehicle in the form of a private limited company will be created. Step 2. Appointment of debenture trustee. An independent debenture trustee is appointed to represent investor interests. Step 3. NCD issuance. The funds required for the business project will be raised from the investors through the NCD issuance of the SPV. Step 4. Property acquisition. The identified property is purchased in the name of the SPV. Step 5. Security documentation. Appropriate security documents are executed to create a charge over the property. Depending on the structure, this will involve mortgage documentation. Step 6. MCA registration. The charge is registered with the Ministry of Corporate Affairs, MCA. This creates a public legal record of the security interest. Step 7. Trustee holds security. The trustee holds the security on behalf of all NCD investors throughout the tenure of the investment. Why is charge registration important? Charge registration provides public record of security, legal enforceability, priority rights over secured assets, greater transparency for investors. Important clarification. Investor security is not merely contractual. It is supported by a registered charge over a tangible real estate asset. After the property is acquired by the SPV, a charge is created and registered in favor of the debenture trustee, giving investors security over the underlying asset. The property is not just identified as security, it is legally charged in favor of the trustee for the benefit of debenture holders. The security is legally documented, trustee held, and publicly registered. 4. What role does the debenture trustee play? The debenture trustee is an independent fiduciary appointed to protect the interest of debenture holders throughout the tenure of the investment. In GHL India's structure, the trustee acts as a safeguard between the issuer, SPV, and investors by holding security, monitoring compliance, and taking action if the issuer fails to meet its obligations. Why is a debenture trustee appointed? The trustee serves as an independent representative of investors and helps ensure that the security structure operates as intended. Rather than each investor individually monitoring the investment, the trustee acts collectively on behalf of all debenture holders. Key responsibilities of the trustee. 1. Holding security on behalf of investors. The trustee holds the mortgage/charge created over the property for the benefit of debenture holders. This ensures that the security is legally controlled by an independent party. 2. Monitoring compliance. The trustee monitors whether the issuer complies with debenture terms, security requirements, contractual obligations. This creates an additional layer of oversight. 3. Protecting investor interests. The trustee's primary responsibility is not to the company, but to the debenture holders. Its role is to ensure that investor rights remain protected throughout the investment tenure. 4. Acting during default scenarios. If the issuer fails to meet its obligations, the trustee may issue notices, enforce security, initiate recovery actions, take steps available under SARFAESI Act 2002, subject to the terms of the debenture documents and legal framework. This provides investors with an organized enforcement mechanism. 5. Maintaining security documentation. The trustee verifies that security is properly created, charges are registered, documentation remains enforceable. Why is the trustee important? Without a trustee, each investor may need to act individually. Security enforcement becomes more complex. Investor coordination becomes difficult. The trustee provides a centralized and legally recognized protection mechanism. Important clarification. The trustee acts as an independent guardian of investor interests throughout the life of the investment. The debenture trustee holds the property security, monitors compliance, and represents investors if enforcement action ever becomes necessary. The security is not held by the company. It is held by an independent trustee on behalf of investors. The trustee doesn't work for the company. It works to protect the interests of debenture holders. 5. Can investors exit before maturity? No. Investors cannot exit or redeem their investment before the maturity date. As a result, there is no premature redemption facility. There is no secondary market liquidity. Investors are expected to remain invested for the entire tenure. Why is early exit not available? The investment is linked to a specific property acquisition and monetization cycle. Investor capital is deployed towards property acquisition, asset management, value enhancement, strategic exit. Allowing redemptions before maturity could disrupt the execution of the project and adversely affect other investors. Therefore, the structure is designed with a fixed investment tenure. Who is this investment suitable for? This investment is generally suitable for investors who seek regular monthly income, can commit capital for the full tenure, are deploying surplus funds rather than emergency funds. Does no exit mean higher risk? Not necessarily. It simply means the investment should be viewed as a fixed tenure, fixed income product, similar to how many debt instruments operate until maturity. The focus is on predictable monthly income, asset-backed security, capital redemption at maturity rather than liquidity during the investment period. Important clarification: this is a tenure-based investment designed for income generation and capital redemption at maturity, not a trading product. Since these are unlisted redeemable secured NCDs, investors remain invested for the full tenure, and the principal is redeemed only at maturity. We prioritize investment stability and capital discipline over short-term liquidity. We encourage investors to invest only surplus capital that can remain committed for the full investment tenure. We've now completed the intermediate level of GHL India Assets investment structure. But here's where the toughest questions begin. When cash flows are delayed, risks materialize, or markets become uncertain, what mechanisms are in place to protect investors? In the next episode, we'll explore the advanced side of the investment structure, covering default protection, capital recovery, liquidity, investor priority, risk management, and SPV performance oversight. This is where we move beyond returns and into resilience. Catch you in the next episode.